Hey everybody, Jake and Gino here, and today we're going to share our top 5 life-changing tax benefits of multifamily investing. Now, the first one, very simply put, there's depreciation. It's called straight line depreciation, and you're able to depreciate your property, hopefully while it's appreciating, for over 27 and a half years. Now, that's pretty good, Gino, wouldn't you say?
I love it, Jake. Think about that. You're buying an asset. The tenants are paying down the mortgage for you. Your asset is appreciating, and you're able to depreciate the asset. What a great feature, bro.
So while that's good, our second life-changing benefit is called cost segregation. So what we're able to do with cost segregation is take that 27 and a half years and pull out specific components and shrink it down into a 5 to 7 year depreciation. Now, the reason that this is so important and it's so close to my heart is because when I was in corporate America, I was actually doing full-time work towards the end as a full-time real estate investor, and I was able to tap into cost segregation. And what that allowed me to do is actually retire 2 years early from corporate America, because all those taxes that I was paying, I had extreme amount of depreciation there, wiping out those taxes that I was pulling in from corporate America, and allowed me to exit the rat race 2 years sooner. So that's been tremendous, and that's a huge benefit, and it really changed my life.
Now, I want everyone to go out there and Google cost segregation. It's also called macro accelerated cost recovery system. It is
Sounds like something from Star Trek, Gino.
Dude, it is an awesome benefit. It also got me out of the rat race a lot quicker, and it has really lowered my taxes going forward.
Now, one of the cool things is our third component here, which is a bonus depreciation that has been associated with cost segregation. So if cost segregation isn't good enough, they've actually been giving out bonus depreciation over the last few years to offer even more economic stimulus and tax benefits to investing in multifamily.
So now I know Jake's favorite food when he comes to the house. He loves chili. Think of cost segregation as chili, and think of that little dollop of sour cream as the bonus depreciation right on top of that chili.
Now, we have to make sure that everyone's aware. Please look into what it means to be a real estate professional, because by becoming a real estate professional, you're going to be essentially allowed to take all full advantages of all this great cost segregation and bonus depreciation. Now, this is another one that's very near and dear to the heart. We like to call it refi and roll. You can simply call it a refinance. But Gino, why don't you share a little bit about what we've done with our portfolio?
Well, what's amazing, Jake, the first 1,000 units we had purchased by ourselves, the two of us with another partner. How do we do that? Where do we get the capital from? We call it the refi and roll. We would buy a property that was underperforming, a mom and pop property. We'd really accelerate that net operating income. We would increase the value by increasing the net operating income. We brought it to a bank. We got an appraisal. We were able to refinance the funds out of that deal and roll them and use them for the next deal. We're able to refinance over $9 million from our portfolio. So it's been game changer for us in multifamily.
The fifth one, the 1031 exchange. Almost, some similarities there maybe to the refi and roll. If you're looking to sell a property and you have a lot of capital gains for that property, look at a 1031 exchange. You can sell your deal, and then you're able to take those proceeds and then put them into a new property, thus deferring that capital gain income. Another way that multifamily owners do extremely well when it comes to the tax benefits.
So many investors start out with a 4-unit, roll it, sell a 1031 into a bigger deal, and then into a bigger deal, and they keep deferring those taxes, keep buying bigger properties. It's an excellent strategy to start scaling up your portfolio.
So I think, Gino, the key here is still, it's not what you make, it's what you keep, and multifamily provides a great shelter for folks when it comes to preventing those huge tax losses that many people suffer in other investment vehicles.
And as Jake likes to say, education times action equals results. Thanks, everyone.
Thanks, everybody.